Okay, let's dive into this. Have you ever wondered how entrepreneurs really make money? I mean, beyond the flashy cars, the vague internet advice, and those endless hustle culture quotes? Well, today, in this explainer, we are stripping away the mystery completely. We're going to look at exactly how wealth is built by breaking down a fascinating framework from an entrepreneur who manages an astounding 17 different income streams. We're going to see exactly what it takes to stop just working for a paycheck and start playing the wealth game at a completely different level.
$360,000. Just let that sink in for a second. That is not a lifetime of savings, and it's certainly not the gross revenue of an entire tech company. That is exactly what one single income stream, just YouTube AdSense, brought in over a single year for the source we're analyzing today. I really wanted to show you this right out of the gate just to prove that the numbers behind these income streams are very real, they are highly lucrative, and they're absolutely achievable if you understand the mechanics behind them.
Because here's the real secret to the whole shebang. Building true wealth isn't just about an endless daily grind. It's actually much more like a strategic, multi-level game. And today, we're exploring what we can call the 17 income streams ascension model. You don't just magically start with 17 streams on day one. Instead, you unlock them level by level, moving systematically from active daily work all the way up to pure automated asset building. So here is our roadmap for ascending through this game. We'll start at level 1, time for money. Then level 2, service businesses. Level 3, productized services. Level 4, selling products. And finally, the ultimate final boss at level 5, automated assets.
All right, level 1, time for money. Literally trading your hours directly for dollars.
At this level, you can literally start today with the skills you already have. But I gotta give you some real talk here. If you stop working at this level, the money completely stops too. It relies entirely on your constant active input. This looks like YouTube AdSense, brand sponsorships, public speaking, and affiliate marketing. Take brand sponsorships, for example. Even tiny micro-influencers with just 5 to 10,000 followers can easily make $250 to $500 a post or newsletter. It might just buy a couple of dinners a month at first, but it is super high margin and it scales up fast as your audience's trust grows.
Now, what's really interesting about this is how platforms like YouTube actually pay out for that AdSense stream. It's all based on a metric called CPM, or cost per thousand views. Generally speaking, creators earn roughly $3 to $20 per thousand views. But it entirely depends on your specific niche. High-value niches, we're talking finance, business, real estate, they command significantly higher CPMs than, say, gaming or prank channels. So, to put that into perspective, if you're in the right niche, one single video getting 100,000 views could mean up to $2,000 in income just from that one piece of content.
And then, oh man, there is the absolute no inventory brilliance of affiliate marketing. You are basically acting as a digital connector. Here is how you launch this. First, you start with apps and tools you're already using. Second, sign up for programs like Amazon Associates or just check the company's direct website. Third, drop those links organically into newsletters or blog posts. And fourth, always disclose honestly. Right now, some AI software companies are literally paying out wild 2-year recurring commissions just for simple software referrals. You connect the buyer to the seller and you get paid monthly for fulfilling absolutely nothing. It is the ultimate digital matchmaking.
Moving on up to level 2, service businesses. This is where you use specific skills to serve clients directly.
To really crush it at level 2, you've got to understand a massive mindset shift. The typical employee mindset is all about trading generic hours for a fixed salary. Basically, you're paid just to be there. But the consulting mindset, that is getting paid strictly to solve specific problems you already know how to solve. Consulting is honestly one of the fastest income streams to start because it offers almost zero overhead. No fancy tech, no physical inventory. You are charging purely based on the value of the solution you provide, not the hours it takes you to actually do it.
But hey, level 2 isn't just fancy white-collar consulting sitting at a laptop. It absolutely includes owning unsexy, essential blue-collar services, like roofing or window cleaning. Honestly, the dirtier the work, the cleaner the margins. Here is the play. Number 1, you don't even have to start from scratch. You can buy an existing business with an SBA loan for as little as 10% down. Number 2, partner with a skilled operator to run the day-to-day. And number 3, systematize it to make it boring. These businesses offer way less competition, much higher margins, and heavily leveraged income once you've got a solid team in place running the show.
Okay, level 3, productized services. Turning your knowledge into a repeatable product that scales.
This right here is a massive paradigm shift away from one-to-one consulting.
At level 3, the key streams are things like online courses, communities hosted on platforms like Slack or Discord, and venture capital fund management fees. We are officially entering the highly scalable realm of one-to-many. You record a training once, and literally hundreds of people can learn from it. Alternatively, you can use your network to raise capital and launch a solo VC fund, managing money for others. In both of these cases, you are building massive leverage for your time.
Now, if you do go that VC fund route, you absolutely need to know this vital piece of industry jargon: carry. Carry is simply the percentage of the upside you make on all the companies you invest in within your fund. While the standard 2% management fee on the capital you raise is nice, it keeps the lights on, carry is the real goal here. That is where generational wealth is actually built if the startups you back succeed and hit a big exit.
Level 4. Selling products. Creating or owning physical or digital things that people buy over and over again. At this stage, the focus shifts entirely away from fulfilling a specific service yourself. Now it's all about mastering distribution and acquiring continuous users or renters. The heavy hitters here are SaaS, which stands for Software as a Service, Airbnb, and multifamily real estate investments. But I really want to emphasize something here. While software and real estate are incredibly powerful and they literally run 24/7, they require real customer support systems, massive distribution, and a whole lot of upfront work or capital. Please do not be fooled. They are highly lucrative, for sure, but they are definitely not easy mode.
Let's actually look closely at Airbnb for a second, because you don't always need to buy a house to make money here. Check out this wild real estate loophole: rental arbitrage. This involves leasing a property yourself and then subletting it on Airbnb, with the owner's explicit permission, of course. It beautifully demystifies the barrier to entry, allowing you to profit immensely from short-term rentals without actually needing the hefty capital to buy the house outright. It's a real game changer.
And this brilliantly illustrates a slightly larger scale approach, getting into multifamily real estate. Here is how you can start cheap. First, you house hack a multi-unit property with an FHA loan for just 3.5% down. You live in one unit and rent out the rest. Second, partner up to combine your strategy with someone else's capital. Or third, invest passively in a syndicate where someone else manages the property entirely. The huge advantage of multifamily units is that they drastically reduce your risk because one vacancy simply doesn't wipe out your entire monthly cash flow.
All right, welcome to the final boss. Level 5, automated assets. Building or buying assets that continuously pay you automatically. Long after the initial sweat equity is put in, this is the ultimate goal of the wealth game. Pure automation, where your money works completely independently of your time. This massive tier is just full of passive powerhouses. We're talking dividend stocks that pay you quarterly just for holding them, bond portfolios where you're literally lending money to the government, franchise royalties, licensing content, book royalties, and angel investing. This level represents infinite leverage. For instance, with licensing content, you create a valuable video or framework once and you let other brands pay to use it globally. One video turns into 20 versions, and one income stream turns into many. It's exactly the playbook used by huge creators like Mr. Beast. Let's compare something like book royalty margins. Traditional publishing usually yields about 10 to 15% of each book sold, but self-publishing, that can skyrocket up to 70% through platforms like Amazon. Now, writing a book is heavily front-loaded work. It takes months of editing, but once it's published, it acts as a permanent business card that never expires, opening doors for speaking gigs while quietly earning you revenue for years to come. So the absolutely crucial point here, well, it's summarized perfectly by this profound quote from our source material. When you've got 10 to 15 income streams, you want some that are boring because boring equals consistent, and consistent is freedom. Holding automated streams like dividend ETFs or bonds provides the absolute ultimate peace of mind. They honestly don't care if the market is throwing a tantrum. Let your active level 2 businesses be the exciting ones. Let your automated level 5 assets be beautifully, predictably boring. Which brings us to our final provocative question for you today. What is your very first move to level up your income streams? The ultimate playbook we've explored today isn't about rushing straight to level 5. It is about starting with a steady, boring level 1 or 2 stream today. Build that initial cash flow and then use that money to systematically fund the investments that will eventually change your net worth forever. You don't need 17 streams tomorrow, but you do need to pick one today. Thanks for joining me on this explainer. I hope you found this framework as fascinating as I did, and I'll catch you on the next one.